All right. Hey, everyone. Let me just adjust my microphone. How is everyone today? Welcome to my stream. Let me just refresh this over here so I can make sure I am simulcasting on TradingView. Okay, cool. I want to welcome you all to my stream. My name is Mark Principato, Mark P Markets. In case you are new, I want to welcome you again. If you don't know how my stream works, let me just briefly explain. So first, I'm going to go over the economic calendar. Okay, it's something that you should do at the beginning of every week, no matter what instrument you trade. You should be aware of what kind of scheduled events are coming out for the week, okay, to help manage risk. Second, I'm going to go through my Bitcoin analysis. And again, today, I really want to focus on this idea of this swing trade. Oh, wrong chart. Of the swing trade pullback, okay, potential swing trade here, and what to avoid in a situation like this, because this is not exactly an easy market. So we're going to talk about that. And then third, I'm going to answer your questions about stocks or altcoins or whatever market you'd like me to see. So now would be a good time for you to share your questions in the channel, whether you're on YouTube or you're on TradingView. And once I complete my analysis portion of the stream, I will go and answer your questions, okay? So again, I plan to keep this at about an hour. All right, so let's get this thing started, shall we? Let me put up my slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, cool. So just a quick bunch of hellos. We got Alex, all right, from Romania. A lot of interesting things going on in Romania these days. All right, Armand, good to see you. Eligius, Mr. Plow, James, okay, Joel, Wedge, okay, Tillin, good to see you all. Jeff, all right, Steen, all my regulars. Peter, how are you? Okay, so let's get this thing going here. Hey, I got Mr. Plow, okay, on TradingView. All right, by the way, TradingView people, if my screen, if you can't see me, if you have a hard time seeing me over there, simply refresh the browser, and that usually solves the problem, okay? So first things first, let's go over the economic calendar. Now, there's an economic calendar on TradingView. You can use any other one. There's plenty of them around. The main idea here is to pick out the most important events from the week. Usually economic calendars have all kinds of events on them, but most of them are not important. So I like to do this exercise where I ask you to tell me, okay? Because this is a habit that you should be getting into. Instead of me just lecturing it to you, you do the work. So you tell me, what is on the economic calendar for this week? Is there anything important? You guys called it really well the week before, right? We had FOMC and we had NFP on Thursday, on Wednesday, and on Friday, respectively. What do we have this week? Anything worth mentioning? The value of this exercise is if you pick something out that's not that important, but you think it's important, I can tell you it's not that important, okay? So you get better at filtering out unimportant information, which there is a lot of in this business. So you guys tell me, what's on the economic calendar? Can you tell me anything? Okay, so let's see here. Jay Powell speech tomorrow. So Joel says Jerome Powell has a speech tomorrow. That's chairman of the Federal Reserve. Okay. GDP, I see Steen says GDP on the 10th of February. Hey, BF. Okay, ECB President Lagarde speaks. All right, so you guys are telling me some events, but when are they? Is it Monday? Is it Tuesday? Is it Wednesday? What day is it? All right, so you guys are pretty much picking out some important things. I mean, the 10th is what, in 4 days? So what is that, Thursday or Friday? Is the 10th? I think Friday is the 10th, right? So US GDP can be a market moving number. Of course, Chairman Powell speaking tomorrow. I don't know what time he speaks. Usually when he has a speech at sometime like 10 a.m., it could be at 2 p.m. You should always double check the time. He can move markets if he gives any hints that the market has not priced in, okay? So certainly good to be aware of. Also, when you trade into such a speech, often the price action before he starts talking can be very erratic because no one wants to take any major positions or take any big chances when he may say something surprising. Okay, so good catch on there, Joel. All right, So Friday, Stian says GDP and ECB President Lagarde. So that's certainly a market mover, especially if you're in any forex pairs or euro cross pairs, that can have an effect. All right. So you guys certainly got the idea. I don't see any reports here that are unimportant. So good job. All right. Again, get in the habit of doing that each week. Economic calendars could be full of lots of frivolous reports. Also, keep in mind, quarterly reports from a company can also count as an important economic event. All right. So, for example, if like something like Microsoft, I believe they reported the week before, but someone like Microsoft, someone like Walmart, a big company can have an effect on the NASDAQ or on the S&P, which can have an effect on your stock trades if you're caught on the wrong side of a surprise. Okay. But again, that really goes for big companies, not small caps. All right. So, hey, Avi. Okay, let's see. Oh, you're still in the queues? Oh, all right. Well, thanks for asking. We'll get into that. All right, so first things first. So good job on the economic calendar. Let's talk about Bitcoin, shall we? So here's my Bitcoin analysis. As you can see, the title of my stream here is how to buy the retrace into the support, right? Basically. So that's what I want to talk about here. I mentioned this briefly in my TradingView article yesterday. Hopefully you've all read the article. All right, so I got to see some people from the TradingView team recently. Nice group of people. Anyway, so let's talk about this situation. Let's talk first about the pullback, all right? Because I've been talking about this. I talked about it in my TradingView article the week before as well. And basically, I was citing the fact that this structure right here on Bitcoin, you can count 5 waves in that structure, okay? Actually, 4 waves in that structure. The wave 3 of that, which is this, 5 waves can be counted in that structure. That's what I meant. Don't be confused what I just said before that. In the broader structure, we can count 4 waves, or basically 3, possibly going into the 4th, right? The 4th wave is the retrace. That's what I'm looking for, all right? Relative to this magnitude. That's what I'm looking for as far as the swing trade long, right? So the fact that we can count 5 waves inside of this structure typically means that the move has run out of steam and a pullback is likely. Now, how far does the pullback go? That is completely uncertain, all right? As you can see here, I have this zone that I've highlighted, right? And I highlighted that 2 weeks ago because that would be an ideal location for a wave 4 pullback to complete, right? Now, has wave 4 begun on this magnitude? It's trying, but this isn't really anything significant yet, right? This is just a little mini 1,500 point range consolidation. That's all this is. That doesn't really count as a wave 4, right? Wave 4s typically pull back in to like the 38% retracement of wave 3. That's its typical pullback area. And usually it pulls back in 3 waves. I mean, that's a typical configuration. It doesn't have to be that way, but 3 waves is a likely configuration. So we don't have any of that here yet, right? So as far as the swing trade long goes, what I want to see is I want to see that pullback test this area. Now we may not get to this area, all right, that I'm pointing out here. We may never get there, and we have to be prepared for that. So what I'm telling you is this: as far as swing trade longs, I'm not interested in calling one prematurely. I mean, just the other day, and someone pointed out here, I think Alex pointed out in the channel here, we had a sell signal. We have the pin bar. I mentioned this in my article as well. Oh, you know what? You guys can't see the chart really well. Let me make the chart bigger. Sorry, guys. I wasn't paying attention. There we go. Alex. Hey, it's all over YouTube. What do you want from me? But yeah, interesting situation in Bucharest. Very interesting. That can turn into a serious international problem. Anyway, yeah, you are correct. So anyway, before we get onto a tangent on that, this is the sell signal. I'm sorry my chart was small the whole time. This is the sell signal. It's the pin bar, right? Now, let me point something out. This is very, very important. And this is what I mentioned before, the mistake you want to avoid. And that is getting opinionated and saying, well, I'm going to short this thing for the pullback. There are times when taking a long or a short is just a bad idea on the swing trade side, right? The risk is just too high on both sides, generally in this area. So there are periods of time, and that period can go on for a month. It can go on for 6 weeks. It can go on for a while, where swing trades on both sides are just not worth the risk. Okay. And it's hard to understand for some people because they need action, or they see things happening. But let me ask you this. Let me put it to you this way. Would you rather take a position, right? Like maybe you got long over here and you're green for like a day or so, okay? And you're happy about it because you haven't missed out, only to watch it go red for the next 3 weeks. And now you have to sit in that thing and hope that you weren't premature on that. Meanwhile, you've assumed all the risk. And chances are, if this thing gets a little wild in this area and looks completely horrible, chances are you're going to get stopped out or you're going to get shaken out. And it wasn't worth your little bit of green that you were so desperate to get here, right? Which is just basically nothing more than a fake out. Okay. Would you rather go through that over and over again, or would you rather just do nothing and wait for a high probability setup? Rationally, you should produce the right answer, but emotionally, people do something else, right? Rationally, sure, we know we should wait for the pullback, but it's very hard because we may not get the pullback, right? So here's the thing. Don't jump to premature conclusions. Right now, this right here, this consolidation may produce the next leg higher. It may begin here. Keep in mind, a surprise catalyst can just come out of nowhere. Something that wasn't expected. Maybe Chairman Powell says something that the market has not priced in tomorrow. It's very possible. And next thing you know, you see Bitcoin doing this, right? It's possible. So there's no way to know in advance, unless, of course, you know what Chairman Powell is going to say. So what to do then? All right. So part of the situation is it's best to avoid the swing trade time frame right now until we get a very actionable level. Now, on the long side, that's this area here, which is basically 22 to 20K, that area. That's a highly that's a high probability area. Of course, we need a setup, okay? So we need this thing to pull back and produce the setup. That can take a few weeks. That's one scenario. The other scenario is the short side. Now you say, well, why not short this thing now? It's too early. This may be a tight consolidation low, and you may be shorting right into the bottom of that. Not a good place, okay? Even after the pin bar. The pin bar was the aggressive entry if you had taken that. I wasn't even willing to call that because I don't like this location, right? If you're going to take the short, the aggressive, the more conservative place for the aggressive short would be above 25K, okay? That would give it one more leg higher. That would give us 5 legs on this broader structure, and that would probably be a more reasonable place to look for an aggressive short, which you can't expect a lot out of, okay? Again, if we get a move like that in Bitcoin, we also have to assume that something big is happening in the NASDAQ, okay, or in the dollar as well, because this thing is just a follower. This thing is not a leader. This thing is following the stock market. All of this nonsense here is just a short squeeze as a result of the stock market in January. If we go to a weekly chart on this, and I mentioned this in my article yesterday, right? We look at the weekly move here. This is not, I mean, it's noteworthy, okay? We're not going to ignore it, but this may just be a short squeeze. Now, one thing that a lot of people have seemed to have conveniently forgot about is the oncoming regulation, right? That we don't know how to factor in yet. We don't know what the SEC or the CFTC, we don't know what they're going to do over the next few months. They used some very strong language back in November and December, but we haven't seen anything yet. That may come to a surprise as to the market, and that this may just be a short squeeze, and we may see lower prices being tested. That's a possibility, okay? Now, a chart cannot help us see that in advance. Understand that charts are a limited view of the market, and all we can do is look at structures and anticipate the structure to continue unless it proves otherwise, okay? So right now, I can look at this structure for the short term and say, okay, one more leg higher, right? That's really all I could say based on this structure, and we need to see that pull back first. We may get the squeeze further right here, right? We may get that one more leg higher, and now I want to get into how to navigate this market if I'm saying, stay away from swing trades right now because they're very hard and they require a lot of patience. What do you do? And I mentioned this in my article as well. Look to smaller time frames. Okay, this is where the day trade time frame comes in. Now you don't have to go all the way to a 5-minute chart. I've demonstrated many day trades on my streams with the 5-minute chart. But for example, you can go to an hourly chart. Okay, let's just take a look at an hourly. I normally don't do this for this stream, but let's just take a look at what you can do with something like this. Okay, now it does help if you have some experience, but when you're looking at something like an hourly, what you're doing here is you're reducing your expectations to the hourly or whatever time frame, smaller time frame. It could be the 4-hour, you can use an 8-hour, you can use a 30-minute. You're going to adjust your expectations to that time frame. Okay, and you're looking for the same type of setups. You're looking for levels, you're looking for structure, you're looking for setups. For example, there's a support here. We saw this support on the daily time frame. Okay, intraday you can work with something like that, but here's the thing: you're not looking for 1,000 points of profit. That's not realistic to this level. But if in a 1,500 point range, if you're able to grab 150 to 200 points in a intraday trade, that's reasonable. And meanwhile, what are you risking? 60 to 80, maybe 100 points of risk to aim for 150 to 200 points of profit. That's within reason. And I've shown plenty of examples of this during my other streams, okay, which you can see. So that is the advantage to doing something like that, okay? I mean, this is very simple. I mean, look, you have a level here, okay? You have resistance up in this area, okay? There's resistance. You have some more up here. So you have levels right here, right to work with. And you're just looking now for basic structure and setups. Now, something like this where you don't want to be confused is you don't want to look at this and say, okay, this is a bearish trend. An oscillator will tell you that that's a bearish trend, but it's actually just a pullback within a range. The bigger picture carries all the weight, okay? So you're looking for longs at the range lows, not shorts. Does that make sense? You're looking for shorts at resistance levels. There's a resistance level right there. If it's testing there, you're looking for a quick short, right? 100 points, 150, 200 points. That's reasonable. And by sticking to that and by keeping your parameters proportional to the time frame that you're working on, you avoid or you mitigate the risk presented by the larger time frame. So, for example, if you're taking a long in this area, right, and it rallies a bit, right, and you take a little profit off of that, you have to make sure you take your profits. Don't sit there and be like, oh, this thing's going to go to 25K, right? Don't start thinking that. You take your little profit and then some news comes out, this thing breaks the support. You are not exposed to that because you should not be in it, or you should be stopped out and you don't get caught in the move that takes it back to here. Okay. Same on the short side. You're shorting this thing. Maybe you grab 200 points and then this thing squeezes. You're not caught. You should not be caught in that. Okay. That's the whole idea of the smaller time frame. So again, I usually don't talk much about that, but in this environment, it's feasible and it makes more sense because that's the adjustment you're making. The swing trade time frame is too risky. Okay, we adjust. We look at the smaller time frames and see how we can work with opportunities there as long as we keep our expectations within reason. All right, so that's pretty much what I want to say about that. Let me know if you guys have questions. Well, I see a lot of TradingView questions here. Okay, cool. So that's pretty much where I'm at with Bitcoin. All right. So what do you guys think? Let's go around. Let's see here before I get into my next section here. Hold on a second. Let me just move this over here. Okay, there we go. So I can see all my questions. And yeah. All right, cool. So let me see what I have here. There's too many. Right. So, and I see lots of people asking questions about things like the dollar, and that's good. Those are very good questions, and those are markets that we should be looking at, okay? Because they can give us clues. Like I said before, Bitcoin's nothing but a follower, and it really helps to look to other markets to get important clues as a way to form our expectations. You have to understand something. No one's going to look after your own money better than you, okay? So it really owe it to yourself to improve your judgment ability. And we can gather enough information from a price chart to make a reasonable judgment, okay? From the price chart. not from what people say. People carry hidden agendas. People are incapable of controlling themselves and their emotions, and you have to pay for that as a result if you get lured in by their nonsense, okay? Most people in this game are not qualified to share this type of information. So you really should improve your own judgment skills or your own judgment ability so that you can make a more informed decision based on factual information that the market is presenting. And we can see that on a chart. But a chart, don't make a mistake, don't think that the chart can show us where Bitcoin's going to be 6 months from now, because that's complete nonsense. Okay? Markets are random. They're highly random. All right, enough before I get into those rants. Let's see what I have going on here. What are people saying? So Alex says sell signal, right? Okay. NFP was a surprise on Friday, certainly not priced in. Right. The dollar looks interesting, right? And and that's another thing. The dollar here, let me just pop over to that dollar real quick, right? The dollar index for a month and a half. Look at the dollar now. This is the dollar index, right? That for a month and a half, the dollar was pretty much, fooling everyone into thinking it was bearish. And I kept warning. I'm like, yeah, it's breaking supports, but when you look at the weekly time frame, this is not exactly a bearish trend. It's just a pullback in a broader bullish trend, and it just basically persisted and persisted and persisted. If you were shorting it over here in this area, right, because you're following your fake gurus, you get caught in this. Okay, I've been trying to buy that, but of course I'm not in it right now. This was a very hard thing to wait for, and there were lots of fake outs that led up to this. But the thing is, the lower it pushed, the higher the risk on the short side, right? So meaning if you were buying the euro into that, this is why, again, you have to stay tight on the risk, because you don't want to get caught on the wrong side of this. Now, this dollar move, that can be the initial move for the next leg higher on the dollar. How much higher? Does the dollar go all the way up here? I don't know. But this can be the initial move for the next bullish leg. It's certainly big enough, right? So any pullback, we should be looking for longs on the dollar or shorts on things against the dollar, right? So anyway, good point there. All right, let me just go through these questions. All right, I'm going to start. Tillin says, ZN1, this is the pulled market back in the bear. Okay, so ZN1, right? Again, this is all going to be relevant to the dollar. ZN1 is the bond futures. Okay, I always tell people to look at this chart. Look at that. So since December, since we've had that ridiculous holiday nonsense volume, and I complain about that so much because it's such between December and February, it's a very hard market, right? Because you have a lot of nonsense. Look at this. So this is the bond market. For a while there, it was just looking strong and refusing to pull back and blah, 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 having everyone convinced that the bonds are, we're rallying now and rates are going lower. No, they're not. Rates are not going lower. Look at this. Okay, we basically rejected this resistance. It's a failed high area. Now, I even pointed out when it broke out here, I said we may have to watch the bonds for a possible new trend. Possible, but we have to see. Well, it gave up not too long after that. It took about a week and a half. All right, but now with this situation here, this is not a new trend. This is most likely a range-bound situation. Now you can argue, but there's a higher low over here. Yeah, there is, but you have to look at the bigger picture on the bonds, and you have to look at some of the other things that are pressuring the bonds, not just the chart. This is the bigger picture on the bonds, right? The weekly. So it made a failed high on the weekly, all right? In an area where a failed high was likely. Look, an old support, okay? It failed here twice. So if this now, we have to see what this thing does over the next couple of months. If this thing starts to push lows, meaning it breaks this low, if it does that, then we're looking at bearish pressure across the board, okay? We're looking at rising rates, okay, going higher than the bonds thought previously here. Because if we're pushing these lows, that means rates are going higher. We're going out of the range, which is going to be a strong point for the dollar, okay? And weak points for euro, gold, silver, everything that trades against the dollar. So keep this in mind here. If this is ugly looking, we have the double top. It's a failed high. We have to see what happens in this support area here. We clear that support, right? Then we're looking at possible continuation bearish on the bonds, which means rising rates. Now, this may be a consolidation as well. If we find support around that mid zone and we hold it and we don't make new lows, that can also be a new piece of information or something that we should consider. Meaning, and I said this before, the market may be formulating a new normal, right? They're like, oh, okay, we're used to rates around here. Rates have been here before, and the market may be comfortable with that. All right, I don't know. But the question that the bond market needs to answer is, do we take out the lows of this? Do we take out this support here? And do we test lows, right? Or do we hold support and basically fail to go lower and just stay inside of a range? A range might be a somewhat of a bullish argument for the stock market. Somewhat. We have to see. Okay. Again, I don't jump to conclusions. I don't hold on to opinions. You have to be very flexible in this game, especially with long-term things. So we have to let the bonds tell us, right? But right now, I suspect the bonds are at least going to work their way towards support. We have to see how they behave there. Does that make sense? As the bonds work their way towards support, that's likely to add bearish pressure to things. So how does that help us now? Don't have high expectations for longs, okay? We may get long signals in things, but don't sit there and think that we're in bull market mode, right? Don't think that, because this says not yet, okay? That's what this says. So let's see here. Jaywa, who knows? Could just be, okay, right. So we have to see, right? The bonds have to give us an answer. All right. Gold. So Peter, all right. So hold on, Peter. Before I get to gold, let me jump over to the other chat here because I haven't said anything to anyone over here, and there's all kinds of questions. So let me see what I have. Okay. Back into all right. For ETH, reasonable short targets. Okay, man. So you remember my quotes, right? That was something I said a little while back about the altcoins, right, in the toilet where they belong. Well, most of them do. I'm just being honest. All right, so Ethereum. So you want to know about Ethereum? Let's pull up an Ethereum chart here, okay? And so again, if the rising rates stick, right, and the dollar sticks, like I said, I wouldn't expect much more. Like everyone gets all optimistic, and I even saw a headline. I couldn't believe it. I saw a headline on YouTube that said early investors are going to make millions. Haven't we learned the first time? Anyway, I can't believe someone would still use that headline. But anyway, so look at the resistance on this thing, right? We have the bearish pressure mounting. As far as a short, I mean, if you're going to go for the short, just keep in mind there may be another leg, there may be another squeeze in Bitcoin, right? Again, it could be on a Chairman Powell surprise, right? We don't know. But if you want to go for the short, your risk is going to have to be controlled by this. Like you shouldn't let this thing go further than that. Okay, that your stop should be somewhere around there, first of all. Now, as far as short goes, I mean, if you're thinking swing trade, it's a tough area. It looks sensible, but as far as reasonable target, I mean, you're looking at the range low, right? 1534. If that breaks, then you're looking at this over here. That's your next support, okay? 1351. So there's some room, right? And this is a pretty significant resistance on Ethereum, but it's following Bitcoin. So the support and resistance you can use as points of reference. But if Bitcoin does something unusual, this thing's going to follow, right? So please keep that in mind. But yeah, so you can play the day trade game with this thing as well, right? Just keep your bites very small, keep your expectations very small, and work inside of this range, right? So on something like Ethereum, you're risking 50 points, or maybe you're risking 30 points to try to make 60 points, something like that, right? It's going to be a little bit less than Bitcoin. Does that make sense? So something to keep in mind. But the chart looks very, very similar, right? Very similar. You can even count the waves in here. They're very clear, right? 1, 2, 3, 4, 5 on wave 3. And this is like the ABC part of wave 4, okay? Like an A, this is like a B, and the C could be like where you get the broader corrective move, right? Which can unfold in 5 legs. Does that make sense? So that's Ethereum. Thank you for asking. Okay, so let's see here. John says, why don't I see the chat on, is it me? Oh no, so no, it's there. You have to refresh the browser. If you can't see the chat on YouTube, you have to refresh the browser. That should solve the problem. Okay, hopefully I can, let's see here. Oh, you guys on YouTube, let me know if, Guys, put something in the chat, like a question in there to make sure that I can see it as well, because I haven't seen something go by in like 10 minutes there. So sometimes this thing freezes on me and I have to refresh it, which is a real pain. Okay, so let me go through here. What are your thoughts on, okay, cool. What are your thoughts on euro? Nice pullback. All right, so that's basically a function of the dollar, right? Let's jump over to the euro. Okay, cool. Thanks, W. I see you. Thanks. I just wanted to make sure. All right, so here's the euro. This is nothing more than the inverse of the dollar index. Stian knows I've been trying to short this thing, right? I gave up shorting it once this move started moving along. I just gave up and left it alone. And now we have this. I was looking at this on Sunday, yesterday evening. After Friday, I missed this move, right? This move is probably going to be like the initial move, and what am I going to do, right? Am I going to short this thing now? No, not into this support. But I'll tell you what, look for the pullback, okay? I'm not a big fan of buying this thing because, again, and we have President Lagarde speaking this week. That can have an effect on this thing. But with that dollar move, right, I suspect that the dollar has been strong and it was oversold. So if the dollar is going to follow through, and usually when the dollar has a push like that, it often it continues, right? Like the momentum just stays intact. They say, Forex markets have a tendency to trend more because I guess they're much harder to turn, right? So if that's the case, if this is the initial move, then I wanted the next pullback, right? Any pullback to here would be the swing trade short. But if you want to look for the long, right, for the aggressive long in this case, right, I call it aggressive because I am not calling this a trend, right? This is not a long-term trend. We could call this, at this point, we can call this maybe like a midterm trend, right? So you have two ways to go about this, right? You want to look for the long, you're in the location, but there's no setup. So perhaps you go to smaller time frames and see if you get the bounce, right? Which means you'd get a minor pullback in the dollar, right? But as far as the bigger picture swing trade, I'd be looking for a test of these levels for the short, okay? I don't day trade the euro, but it's possible. I mean, it moves significantly at times. So it's a very high volume type of instrument. So there's some possibilities there. So right now, really, you should look at it from both sides. You're looking at this structure, right, as a possibility for at least a bullish attempt, okay, bullish attempt, but I would not be expecting a higher high, okay? So that's how you have to treat that. That's why working on a smaller time frame, something like maybe a 4-hour or a 1 hour on the euro may make more sense as well. But at this point, I'm not going to chase this short, and there's no technical reason to go long on this time frame. Does that make sense? So that's the euro. It's basically inverse of the dollar. Hey, Matos, how are you? What do you think of BRICS, ruble, new BRICS currency overtaking the dollar? Okay, let's take a look. BRICS, BRICS. What is that? I don't see that here. Is that a symbol or something? New BRICS BR currency overtaking the dollar. Yeah, I'm not familiar with that one. If that's the precise symbol or not. Okay, Milad, how are you? All right, cool. Milad, I meant, I wanted to reach out to you the other day, but I things were complex and I couldn't. But we're gonna get together soon one of these days. Okay, I was thinking about you. So people should be very careful with altcoins, as SEC may do a lot. Yes. So, and I agree with you on the altcoin thing. That's why I'm not a big fan. I have like my speculative growth portfolio, which I have yet to put any symbols in. Altcoins, I'm going to hold off on altcoins until we see something out of the regulators. They've been quiet, but I'm expecting over the next few months for them to come out with stuff. And we're going to see it all over YouTube, and everyone's going to say how bad everything is and blah, 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 blah. But the thing is, at this point, we don't know how. So, and if they treat these altcoins as securities, which is a likely possibility, if we see that, then it's going to cause, I think it's going to cause a lot of problems for a lot of these altcoins. And they're going to have to close shop. They're going to have to do something. They're going to have all these expenses that they don't have right now and all those other things. So plus, we're also going to be able to see their financial situation because they're going to have to report financial statements and stuff like that if they are a security, right? Like a company. So, and a lot of them probably don't want us to see that information. So anyway, I agree with you 100% on that. Hey, Spiker, thoughts on Litecoin, specifically LTC, BTC, and it's okay. So the halving thing. Don't make a big deal out of the halving thing. Let's take a look at now. I'll put up LTC, BTC real quick, but here's the thing. The levels on these charts are really not going to be very helpful. You really need to look in terms of a stable coin like the dollar. Okay. I mean, we could sit here and look back and say, oh, look, a resistance broke. Oh, this is support here. Sure, you can try working with that. But the thing is, it's really, you need to be paying attention to what's happening with the dollar, right? Or a stable coin. So if we look at Litecoin against the dollar, and there's a halving, I guess you said in August. Don't make a big deal out of that. Okay, a lot of times they hype into that, right? They get everyone buying into it for no reason, and it's just a bunch of nonsense. Okay, I mean, it doesn't really have any effect. Let's look at a weekly chart. So again, Litecoin's had an interesting move, right? But the thing is this: Bitcoin, it's following the Bitcoin situation, basically, not exactly, but basically. So look at the weekly, okay? When you want perspective, look at where Litecoin is right now. That is an old support, now likely to act as a resistance. Do you want to get long here? I certainly wouldn't, especially with Bitcoin starting to hesitate, right? And we have all these potential surprises coming, and Bitcoin's in a resistance area. I would wait for pullbacks if I was going to get involved with this thing, but I really not a big fan of getting involved with something like this on the swing trade time frame, but that's just me. So if anything, at this level, I wouldn't touch it. This is a great place to get out of some if you have some, and you have some from a good price. How much is this thing right now? $97. So if you bought some from a good price, this would be a good place to take some profits off the table. Okay, not the whole position, but not a bad place to unload risk because you're at a resistance. It's a bad place to put on more risk. Okay, just like that Bitcoin situation. That's how I would look at something like that. Your next support on Litecoin is basically here. So if there's a pullback, you're looking at like the 85 area, which isn't too far, but you're looking at something like that. Okay, if there's a significant pullback. So why not lock in a little profit if you have some and perhaps buy it back around that 85 area or slightly lower. Again, it depends on if this move was nothing more than a short squeeze, then it's not a good idea for us to assume that a new trend is in place. Okay, we can sit here and say, oh, this is a bullish trend. Well, this structure is bullish, but if this move is a result of an unsustainable short squeeze, then when the pullback occurs, right, and there's really no one really buying this, it was just shorts covering, then the supports are likely to break, right? So you have to be careful of that. There's no way to know if that's going to happen in advance. So look at your levels, look at your general structure. If this general structure changes, that's when you want to hold back, okay? You also have to know what kind of perspective you have. Are you looking at this from the investing perspective, swing trade perspective? Like that's important because that will answer a lot of questions as far as how you're looking to manage risk, okay? And how you should form your expectations based on the ranges of the time frame. All right, so I hope that answers your question. Let me jump over to the other one over here. Okay, so let's see, just going back. If I miss your question, please just put it back in the channel. Sometimes when I'm skipping over here, I miss people's questions, and I'm trying to answer as many questions as possible. So Peter says, can we look at gold? Yeah. So XAU, USD, gold. So gold is being affected by the dollar, right? This whole gold move, by the way, was nothing more than a reaction to the dollar, and it caught a lot of people. And when gold has a dramatic move, how high was its high? 1959, right? So I'm sure a lot of gold people were going nuts there and making a big deal. Now, I think it was a week ago, I had pointed out that gold is really nothing more than just at the high of its range or near the higher part of its range. This is the gold range on your bigger picture, okay? This is your gold range. It's been as high as 2075. I think that was as high over here, 2070. And that dates back to March of 22. So almost a year ago, okay, gold was up there. Gold has just basically worked its way up to the high part of the range. And now it's in a tough spot. Okay. So if you recently bought gold, I don't know what to tell you. Okay. It wasn't a good place to be buying gold. Now you're stuck in this thing, or you should take a loss or something. I can't tell you how to trade, but gold looks to be working its way back toward the mid part, right? The mid part of the range, which is a really bad area to buy or sell, okay, for new positions because it's so random. For new longs on gold, and we're talking long-term, bigger picture, you really should look for range lows, and we got a ways to go before it gets back there. Of course, in a very strong dollar environment, gold can get there, in a couple of months. It's possible. Not saying that it's going there, but it's possible. So the idea here is to understand where you are in the range. Anyone that's been telling you that gold is like in some kind of spectacular rally, it's not. This is a consolidation, and it's still inside of it. Okay, so there's nothing spectacular about a consolidation. It's just, people have no perspective, or they're, you know how the hype machine works, and they see this and they all get it, they all make a big deal out of it. Meanwhile, you're still inside the range. It's nothing more than overlap. That's all it is. This is not a trend on this time frame. Does that make sense? So again, it depends on what you're looking to do with gold. If you're looking to invest in gold, or hold gold products over the long term, whether it's gold miners or gold, physical gold, these are the prices to wait for. Okay, somewhere in that range. Okay, if you want to average into it or build inventory, you should probably at least wait until the midpoint, at least something like that. Okay, this is a bad place to start doing that here. Does that make sense? The current prices for gold are good places to take profits, right? If you haven't done so yet, take something off the table, reduce risk. Sure, it can bounce up a bit, especially if the dollar pulls back a bit, but I would not anticipate new highs because this is not exactly a bullish trend. Does that make sense? So that's gold. All right, so good question on gold. All right, so I see Avi, you're asking about the Qs. Now, you mentioned you're short, you are still with the SQQQ. What do you think about the QQQ? So that's the NASDAQ, right? So we can take a look at the NASDAQ, NSX, USD, all right? That's the QQQ. So let's talk about this. The QQQ is just the ETF version of this. This is the CFD. This right here is the daily chart, all right, of the NASDAQ 100. And look at this. So you have Friday. Friday was NFP. It produced an inside bar and a bearish pin bar at the same time. Not a good place to be long, right? So now today it took out that low. It took out Friday's low, which is a sell signal in the NASDAQ. So should we be surprised that we see a little weakness in Bitcoin? Well, no, these two are following each other, right? I mean, look, Bitcoin benefited from this. Now we're pulling back a bit. So as far as this thing being a short, you have the sell signal. You're just against some pretty significant momentum. But kind of like gold, this thing is coming off look where it came off. This is not a coincidence, all right? This was a level previously. Look, going back even further. Look at that, right? Going back even further. So there's some significance to that level. It touched it and it sold off. Okay, no problem. The question is, how far does it go? You have to look at your old resistance, new support. Now, I guess those quarterly reports or whatever blew this thing through this resistance area, okay? So this would be the area I'd be looking for in terms of support on the NASDAQ. That area happens to be, what, 11.7s? How much is this thing right now? 12.5. So this thing can pull back a good 7 to 8 to 900 points, okay? Possible over the next month. It's very possible. So that's, if you're short or if you're long the SQQQ, which is basically short this thing, that's the kind of potential you're looking at, Avi. So it's not a bad idea. It's aggressive. Now realize the higher low can develop anywhere in here as well. So that's really what you should be looking out for. This game is really about managing when things turn on you. All right, when things are going your way, you just try to let them work as much as possible until you get a conflicting signal. You don't have a bullish conflicting signal here yet, okay? But like, for example, if you were short back here, right? Let me just give you an example. Because what's a bullish conflicting signal? If you were short back here for the same reason, like, okay, it topped out, blah, 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 I'm short, blah, blah, blah. And then you get this candle like the next day, and that high candle high is taken out, that's a conflicting signal. Okay, another conflicting signal, right? Bearish candle at one point turns into a bullish pin bar and then takes out the high. You don't want to see that if you're short. Okay, so if something like that develops again, that calls for attention, whether that means adjusting a stop or doing something to manage your risk. Okay, because again, this is bullish momentum, and if more positive news comes out and keeps this thing going, you have to realize that it's possible that it can extend further. You have to be open to that possibility, especially if you're losing money in that situation. So it's best usually to try to mitigate the risk as soon as possible and take the smallest loss possible. It's not always easy to do, but that's usually the best choice. Okay. Again, I can't tell you how to trade, but that would be a suggestion. So I hope that helps. Hey, Travel, how are you? Long time no see. Okay. Yeah, okay, so I answered that about that situation. Okay, waiting for 17K. So on Bitcoin, that's, I don't know, man. We need to break 20K first. So I wouldn't be too opinionated on that. Okay, I wouldn't be too opinionated. Okay, GBDC issues. Okay, I'm not sure what you mean by that, but again, anything is possible. And if this move that we saw on the Nasdaq and all that stuff, if it was nothing more than a short squeeze, if that's all it was, then a pullback into that area is not unreasonable, right? So let's keep it that way. People always ask me, what's your opinion on this? Where do you think Bitcoin's going to go? I have no idea. I try not to have an opinion. I adjust as the market gives me new information. Okay, that's really the best way to go, especially when things are highly uncertain as they are now. And then you have these markets like the dollar that were persisting for so long in an oversold situation, and it looked like it was never going to turn the other way. And then you get a surprise out of NFP, right? So that's why in these situations, when things are very confusing or uncertain, go to the smaller time frames and work in the smaller time frames. Okay. Hey, Levant, how are you? Greetings. Okay. Gold. Okay. Covered gold. No problem. Copper. All right. So I'll get back to copper. Let me see if I have other questions here. You think the overall trend is still bearish, or can you make a reasonable case for a trend change? So if you're talking about Bitcoin, Joel, I mean, so I pointed out with the weekly time frame that this could be the beginning of a change, but I'm not convinced fully, especially with the way the bond market looks and all that other stuff. We need to get some more answers out of that. It's still very unclear, right? So we can look at the short-term structures and try to work with the short-term structures, but I would not be forming long-term expectations at this point, right? That's why I've been very, very slow to put anything in the speculative growth portfolio, because I'm looking at these indices, right? Like I'm looking at like the NASDAQ. I'm like, man, do I want to be buying stocks when this thing looks like this? I really don't. Okay. I prefer to be buying stocks when things kind of look like this, right? For long term, we're talking like a year or two out, right? So we look nothing like this right now. And these type of moves, I'm highly suspect of, because I know they're not sustainable. You get like a month and a half, right? Everyone's getting all excited and blah, blah, blah. I'm looking for a sizable pullback, something that's within proportion, okay, to this. All right, we don't even have a 382 there. I mean, we don't even have that. Okay, so I would like to see something at least close to that. And then I'd be more apt to start looking for inventory in certain stocks and stuff like that. Like I said, I'm staying away from altcoins until I have some more clarity on what's going on there. Okay, so let me see what other questions I have here. Okay, hey Natash, how are you? From Iran, welcome. Thanks for joining. What time frame you suggest in this situation? So, like I said, you can look at a 4-hour, right? So smaller time frames. That if I'm looking for Bitcoin, but I don't want to swing trade, but I want to look for action on smaller time frames. 4-hour, 1 hour, okay, possibly 30-minute. Again, it's going to depend what you're looking for. And on some of my demonstrations, I've used 5-minute. But if you want to call it like an intraday swing trade, or maybe like a 2-day trade, a 4-hour would be appropriate. Does that make sense? Working on something like that, because that will still, if you're working with the risk parameters on that time frame, it will still keep you out of the bigger picture trouble. if you understand what I'm saying. Of course, if you respect the risk in that parameter, okay? I don't want to confuse people. All right, any idea about where SPX broke a lot of resistances? Okay, so that's the same as the NASDAQ, right? Let's take a look at we can look at SPX USD. It's the same deal, okay? The SPX just moves a little slower, and it has broken some resistances. Let's look at the weekly chart. So again, here's the thing. There's a higher low, okay? And now we're now testing a resistance area on the S&Ps. This could be a result of many things. If and the dollar, like I said, has come off over the recent month and a half, 2 months. Now the dollar may be coming back, meaning going higher. If that's the case, what do we have here in the S&P? We have a resistance. And if that dollar sticks and works its way higher, we're looking at bearish situations over the next few weeks or months in the S&P if that dollar continues to rally, right? It'll put pressure on this thing. So what that tells me is I should not be buying S&P things here. Like I shouldn't be buying stocks and expecting this rally to continue. This is a bad place to be buying stocks. All right, you could say, oh, but it's a higher low. Well, here's the thing. This structure right here, that's a three-legged structure, which is typically a corrective wave, right? Now, if we can continue and we break like these resistances, we break there, then maybe at that point we can start arguing for more of a bullish trend, right? And maybe the bonds will give us more clarity as well. And maybe we'll have some more clarity from the Federal Reserve too, because something like that can take a few weeks, maybe a few months, right? But if we don't break that, if we just stay inside of this resistance, we can possibly see a test of these supports, at least this one right here. Very reasonable, okay? Very reasonable pullback there. And that could be over the next week or two. Does that make sense? So right now, this is a weekly chart, and the week just started. So we don't know how this candle is going to close. If we get an inside bar this week, that could be the beginning of it. Does that make sense? So risk is high for stocks. I'd be careful. You know, if you're going to be working with stocks, look for small bites, right? Don't get too aggressive with the stocks, or at least be very quick if something goes the wrong way. Don't hold on to these things with hope, not with the S&P looking like that. Does that make sense? If we were at a bottom, that's another story. But as you can see, we're at a resistance. So I hope that answers your question. Good question about the S&P. Okay, we got E from Lithuania. Okay, XLM, sure. Let's take a look. XLM USD. I haven't heard from this one in a while. Stellar. Haven't heard from this one. Look, let's go to the weekly chart. Okay, same situation as Bitcoin. I mean, look, if you look at these things on the bigger picture like this, I mean, to get some perspective, look at this, right? This thing is nowhere near. Look at this. It's highs, right? Which is what, 79 cents. This thing right now is basically at 9 cents. So this little blip, as you can see on the bigger picture, is nothing more than a blip. It's just a possible short squeeze following along with the Bitcoin move. I would not be piling into these things right now, okay? Especially if rates faked everyone out and they start rising again, these things are, like we said before, back in the toilet, okay? Where they belong. This one especially. I mean, come on, a lot of people got screwed in this. These things are nothing more than a vehicle to rob retail investors. That's all they are. They're mostly, a lot of these are centrally controlled and all that other nonsense. And, you know, I don't have to rant about that. You guys should know. But the point is, similar to Ethereum, similar to Bitcoin, we have a test of resistance. You see that? I mean, you guys can do this on your own charting, right? You don't need me to show you that. But that right there tells you it's a location where you should either be taking something off the table if you're long from a good price, or something, right? Reducing risk. This is not a place to be putting on risk. Look at the previous candle. Previous week's candle is a bearish candle. If you take that low out on the weekly time frame, you're looking at a sell signal. And this may be a lower high, okay? In an area where a lower high is likely to develop, and it's a failed high relative to that previous high over here, okay? So you have a bunch of structures working together there. Does that make sense? So that's what I can say about that. I hope you find that useful. All right, let's move along. Good question. Good question. Okay, So Levant, I'll see if I can get back to copper. Let me see what else I have here. Okay, BRICS. I guess Brazil, Russia. Oh, okay. Good evening. Okay, Ryan, could you take a look at BNB? Okay, so I'm going to choose one of those. Let me just see what I have here in this other chat because I see a lot of stuff going on over here. Hold on a second. So Mind. Okay, I have a question. Netflix. So I spotted a rising wedge. Okay. I told you that I was short. I had moved my stop loss to break even. Okay. Now I'm looking for a new entry. All right. How would you read this failed breakout? All right. So I'm not asking for financial advice, just your opinion. Now I saw that dollar. Okay. All right. So I talked about the dollar. So it's a good question about Netflix. Let's pull up Netflix. NFLX. Right. So Netflix, you were short Netflix. Oh, I think I remember this, right? And you had a pretty good price, I think. I think I remember it. You have first of all, Netflix is a market stock generally. Now this rally in Netflix, I don't know. First of all, let's go to the weekly chart, right? I think that this is just part of the NASDAQ situation. All right. Now, I mean, Netflix is coming from 700 and something dollars. So this move here may be nothing more than just a reaction to the short squeeze situation, right? This can be just a reaction to the NASDAQ. So you have this bullish leg. A lot of people are going to think that this thing is bullish now. You're right inside of this resistance right here. You see that? It's worked its way back there. So as far as shorts go, you have, let's go back to the daily, because the thing is on your midterm trend, right? This is a midterm trend going way back, right? This is still part of your midterm trend, possibly even longer term. But for now, we'll just say this is midterm. This is a bullish structure. So shorting this right now is going to be tough. Don't get opinionated on this thing because you're just fighting people that want to be long for whatever reason. I'm not a big fan of this stock. You have a bearish pin bar now in place. If the low of that pin bar is taken out at 358, you have a potential sell signal, right? And double top with a pin bar. So you have a combination of things taking place there. Keep in mind, we just took a look at the NASDAQ and the S&P, and they're both at significant resistance levels. If they pull back, this thing is going to pull back most likely because, this thing's a follower, right? Netflix is part of the FANG group, and they all pretty much follow the NASDAQ, right? They're highly correlated. So if you're shorting this thing, you're looking for a test of this level here, 324-ish, something like that. Don't think you're going to get more than that, okay? Hopefully, if you stopped out for break even, nice job. So it can be frustrated at times, but you're better off breaking even than getting caught in something that's going to really start working its way against you. What if you shorted it like over here and you held on to it the whole time? Right? You can get margined out of something like that. So I say nice job on that break-even trade. Yeah, you have another short signal setting up, and I would, a reasonable target would be this area here, okay, if it can follow through. Of course, you're going to need the S&P and NASDAQ to follow through. At least, I mean, they all move together. You're going to need them to come along with you in order for this thing to do its thing, right? Otherwise, you're likely to see another conflicting signal. Does that make sense? But it's an aggressive short. If you're willing to go for it, it's aggressive. Now, see, something like this for such an aggressive move would be perfect for an options trade. Okay, I'm not going to sit here and talk lots about options, but there are option combinations that you can employ here that would keep your risk very well defined. Even if this thing decides to go against you in a dramatic way, your option situation won't continue to lose money as you would if you were short the outright stock, and your stop gets slipped or whatever, or you don't put a stop, right? Option, this would be a perfect type of trade for like a vertical spread. Okay, anyway, so good question. It's not a currency yet. Oh, okay, it's a union of Brazil. Okay, got you, Matos. And they basically want to make a united currency, which is supposed to overtake the dollar. All right, something in those lines. Thought you might. Yeah, so I heard, I wasn't aware that it was called BRICS. I thought it was called the SIR, which was Brazil and Argentina. I thought they were trying to do their own currency, something like that. They're all trying to come up with their own whatever. If the euro is any example, I don't know. I mean, you have to look at the GDPs of these countries, what they produce. and as a group, I mean, look, the European Union, I'd say, has some pretty powerful countries in it as far as what they produce. Does South America produce at the same level? I don't know. So I don't know. I don't know what to make of that. Okay. I don't, if the euro can't succeed, or if the euro has such problems, what kind of problems are they going to face? And what are they going to back that up with? They're going to back it up with gold or silver? That would be nice. Okay. Are they going to back it up with their own? Whoa, we produce stuff. We produce things. You're going to back it up with that? Only we can do. Only the U.S. can get away with that. All right. So yeah, I don't know what to tell you on that one. It's interesting. It's certainly dramatic, and it's going to create a lot of opportunity to write a lot of articles. But as far as being a currency to compete with the dollar, I don't know. I mean, I just don't know. I don't know what to make of that. Okay, I'm long since 70. Okay, and Spike, I'm gonna have to go back because I don't know I have to see what you're referring to there. Hold on, let me just go back, Spike. What are you long from? I don't see it here. Okay, hold on. From 70, Litecoin. Okay, so I mean, yeah, again, you have yourself. That's a decent price. So one thing to consider, again, I can't give you trade advice, but perhaps lighten some of that, right? Take maybe 10 or 20% off the table, lock in some profit at a high. It may go higher and you still have some, but if it pulls back, you have locked some in at a good price, okay? It usually never hurts to take something off the table. Never hurts to take a little bit of profit, okay? All right, so thanks for pointing that out. All right, let me just move along here. Again, if I missed your question, I apologize. I have a few more minutes. Okay. Okay. So dollar is controlling every risk on asset. So how is just in case we have one? Well, again, the dollar is all about the Federal Reserve, right? And interest rates. So we can't look at the dollar by itself like it trades alone. The dollar is affected. So as rates rise, that's going to be a strong that's going to be a strong argument for the dollar. And rates, as we saw before, are now back on the rising mode, right? The bonds told us that. Also, Federal Reserve. They came out on Wednesday, and somehow, for some reason, the market got really excited because I guess Chairman Powell said something dovish. I don't know exactly what he said, but the markets were really happy, and then NFP came out. And now the dollar looks like we see it. So that was a really quick change from Wednesday to Friday. That's why it really doesn't help to have opinions. Just if the rates continue to rise, it's going to be a strong argument for the dollar. We have to look at it that way. And that's where we're going to get our lead from, the bond market. Because the Federal Reserve, they can say one thing and then do something else, right? Or they like to kind of talk things around, where the bond market is the bond market. Right, the bond market is doing things because perhaps it knows something, or it's pricing something into the future, right? That may not be apparent to us right now. Does that make sense? Okay, a friend of mine works for J.P. Morgan. Oh, I can ask. Oh, cool. That would be cool. Still negotiating with Mayor. Yeah, these billionaires. I mean, they always claim to be busy. Anyway, I don't know. Speaking of billionaires, I actually saw Ray Dalio. I actually saw him. And I have a guy from TradingView over here who can actually confirm that. But anyway, but he wasn't talking to me. I'm the only one whose stream says offline. Yeah, Matos. Yeah, you have to refresh that. Do you think the USDT is bluish? Do you think Uni is bluish? I don't know what you mean. Oh, I think maybe you mean bearish. Okay, so hold on. Uniswap, Uni USDT. Okay, so here's the thing. Again, these are altcoins. Go to the weekly, right? And also realize that many of them, they don't trade in isolation. They don't trade on their own. So you need to pay attention to the weekly, and you need to pay attention to Bitcoin, right? So look at them. We looked at some other altcoins here. All of them are basically at a resistance level. So whether they continue higher or not is really going to be a function of Bitcoin. And what determines where Bitcoin goes pretty much is the NASDAQ, okay, and S&P. So if the stock market pulls back, and what pulls back the stock market? A strong dollar. If dollar continues stronger, right, we get a little minor pullback in dollar and dollar continues higher, you're likely to see bearish candles develop over the next few weeks in these altcoins. Right? It's that simple. These things do not trade alone in isolation. So for swing trades, that's why I don't bother with these things for swing trades. If you're looking for smaller time frame kind of action, maybe you can get away with it on these things, but you might as well just work with Ethereum or something that moves a little more, something that has futures contracts, and you can trade like on Binance or whatever. Okay, if you're going to play that game. So I hope that answers your question. All right. Okay. So all right. So here's what I'm going to do. I got a couple more minutes. I'm going to take a look at BNB. All right, which is Binance Coin, BNB. Now, Binance Coin, speaking of Binance, look, it looks very similar. Binance Coin can act in strange ways because it's Binance, and they can say things and they can do things to move the value of their currency around, as we've learned, thanks to FTX, right? So again, resistance level, right? So all of these things, look, everyone's all excited because they look bullish, and everyone thinks, oh, the new bull market. But like I said, I saw a title that said, early investors are going to be millionaires again. I can't believe I saw that title. But anyway, really, you come out with this now while these things are at resistance levels? Why weren't you coming out with that title when it was here? That's what I'd like to know. That's what I want to know from all these frauds and fake gurus. How come you always call it at the top, not at the bottom? Anyway, so you're looking at a resistance level. So the problem with these is, do you take risk now? Are these wise levels to take positions now? And the answer is no. Not on the swing trade time frame. I wouldn't touch these things. So while there may be a little bit of movement higher possible, right? Like you may touch something like this, which is what, 359, and this thing right now is at 328. So 30 points is within reason. But like I said before, do you want to try to capture 30 points, or worse, you think you're going to make more than that, right? You're up 30 points, and then this thing turns on you hard, and now you get stuck in it. So that's why something like this, again, try to employ a smaller time frame. If you're going to go for those 30 points, great. Try to grab 20 out of the 30 points, but you shouldn't be risking more than 20 points if that's your profit target. Does that make sense? Because you can never make money if you're risking more than what you're looking to make. Because you have to understand something. It's safe to assume in this game that you're only going to be right half the time. Okay? It's safe to assume that because markets are highly random and we have no advantage. Okay? No one has an advantage. Many people claim to have advantages. They don't have advantage, because if you have an advantage, you don't share it, right? You can't, because then you will no longer have an advantage. So you have to assume, it's safe to assume that you're only going to be right 50% of the time. So how do you make money in such an environment? Well, you have to really focus on your risk, and you have to really mitigate your risk. And when something turns the wrong way on you, you have to take notice and you have to take action. You have to do something about it, right? So if you're up 50 points or something, right, and you move your stop to break even, the thing turns around and breaks you even, you have to think of that as a win, because you were able to come up with a risk-free trade at that point. Does that make sense? So it's all about mitigating the risk. All right, you guys. So if I missed your question, I sincerely apologize. Yeah, because I have to wrap this up. So again, I stream every Monday. You can catch me here simulcasting. You can also catch me on Wednesdays. Okay. By the way, click the link in the click the like button or the boost button on TradingView here. It helps me out, and subscribe to the channels. It's always helpful as well. Okay. So I hope you enjoyed my stream. I hope you got something out of it. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.